2025 has been a great year for the markets, but according to the bears, SoFi has already peaked. They argue that growth is slowing. Analysts are lowering their expectations. Insiders are selling shares, and the company is diluting shareholders, or at least that's the narrative they want investors to believe. In this video, I want to break down those bearish arguments one by one and ask a very simple question. Is SoFi stock a buy, or is SoFi a sell heading into 2026? I've been following SoFi for a long time now, all the way back when the stock was trading around $6. And it's easily the most talked about stock on this channel. So if you're a SoFi shareholder or someone closely watching the company, this video is especially for you. As always, I need to say that I'm not a financial advisor, and this is not financial advice. This video is for entertainment and educational purposes only. If you enjoy SoFi content and want me to keep making these videos in 2026, let me know in the comments and please hit the like button because it really helps the channel. Now, something I forgot to mention in my last SoFi video is just how much the company is expanding behind the scenes. SoFi recently announced plans to add more than 225 jobs in Charlotte, North Carolina, and shortly after that, Mecklenburg County approved incentives tied to a roughly 250 job expansion in Ballantyne. This came on the back of new product launches and broader platform developments. And if you look at SoFi's careers page right now, they are hiring aggressively across engineering, compliance, product, lending, and technology roles. Companies don't usually hire at this scale if they believe growth is about to stall. And to me, this signals that management is preparing for the next phase of expansion, rather than pulling back. That's why opinions on SoFi are so divided right now. Some investors believe the easy gains are already behind us, while others think the real growth story hasn't even started yet. In my view, 2026 could be a very important year for SoFi, but execution will matter more than ever. Recently, an article listing the top stocks to buy for 2026 caught my attention. The number one pick was Lemonade, citing improvements in AI-driven underwriting and narrowing losses. But what really stood out was that SoFi was ranked number 2 on that list. The article pointed to accelerating member growth, strong product expansion, and SoFi's strategy of cross-selling products as key drivers for future growth. SoFi was listed alongside companies like Walmart and American Express, which puts it in some interesting company and shows that at least some analysts see it as more than just a speculative fintech. On the other side of the argument, a bearish seeking alpha article titled "Time to Exit This Fintech Darling" laid out the case against SoFi, pointing to slowing growth, early-stage profitability, share dilution, insider selling, and analyst downgrades. Let's start with dilution. Yes, SoFi did issue additional shares, but the dilution was less than 5% of the total share count. That level of dilution is not unusual for a growing financial company, especially when the capital raised strengthens the balance sheet. And it's also worth noting that those shares were issued at higher prices than where the stock trades today. This wasn't desperation dilution, it was a strategic move. Next is insider selling, which always sounds alarming until you actually look at the details. Recent filings show several insider transactions, totaling around 9.5 million shares, but the majority of these were tax-related transactions, known as Code F sales, where shares are withheld to cover taxes after stock awards. Anthony Noto, Kelly Q, and Chris Lapointe all sold portions of their awarded shares, yet they still hold millions of dollars worth of SoFi stock. Only one sale, by Jeremy Relly, was an open market sale, and even then, it came just days after he had been awarded over 1 million shares. Insider selling for tax purposes after compensation. Awards is normal and doesn't automatically. However, if you look at SoFi's track record, there's a very clear pattern. Going back to 2021, SoFi has beaten revenue expectations almost every single quarter. And the same is true for earnings per share. The only negative surprises occurred before the company reached profitability, when sentiment around SPAC mergers was extremely negative, and many companies that went public that way struggled or failed. Since turning profitable in 2023, SoFi has consistently exceeded expectations. So when analysts lower estimates, history suggests the company often proves them wrong. There's also concern about the technology platform segment, where account growth dipped slightly in the most recent quarter. But when you look at revenue, Q3 was actually the highest revenue quarter in SoFi's history. Margins shifted because other segments grew faster and contributed more profit, which reflects diversification of the business rather than weakness. Institutional ownership is another important piece of the puzzle. While some funds trimmed their positions slightly, others increased theirs significantly or initiated new positions. Overall, institutional ownership of SoFi stock is at its highest level ever as of December 2025, which suggests that large investors, on balance, are becoming more confident rather than less. At the core of the SoFi story is member growth and cross-selling. Member growth is accelerating, products per member continue to rise, and that translates into higher lifetime value and lower acquisition costs over time. This is exactly what you want to see from a digital financial platform that's trying to build a long-term ecosystem rather than rely on a single product. Looking ahead, full year 2025, financials are expected to show record adjusted net revenue and record adjusted EBITDA, with earnings set to be released on January 26. That report could be a major catalyst either way. So when we ask the question, is SoFi a buy or a sell for 2026? My honest answer is that SoFi is still a growing company, still expanding, still beating expectations, and still focused on long-term execution. It's not a risk-free investment, and there will be volatility, but the idea that the growth story is over or that insiders are abandoning ship doesn't really hold up. When you look closely at the data, this is my last SoFi video of 2025, and I want to thank everyone who watched, commented, and shared their views this year. Whether you're bullish, bearish, or somewhere in between, I appreciate you being here. Remember, I'm not a financial advisor, and this is not financial advice, just my thoughts based on the information available. If you enjoyed this video, don't forget to like, subscribe, and comment, and I'll see you in 2026.